When it comes to securing a mortgage, most people assume that perfect credit and a hefty down payment are the only ingredients needed for success. But for healthcare workers and gig economy professionals, the reality is far more complicated. Imagine saving for years, building an impeccable credit history, and still being told no by lender after lender. That's exactly what happened to Sarah, a registered nurse whose story reveals a hidden barrier in the home buying process and a powerful strategy to overcome it. Sarah had done everything right. She diligently put aside $80,000 for a down payment, and her credit score was an enviable 740. What set her apart even further was her work as an on-call nurse, which meant she earned nearly 50% more per hour than her full-time counterparts. On paper, she looked like the ideal candidate for a mortgage, but when she approached her first lender, the answer was a flat rejection. The reason? Unstable income. The second lender echoed the same sentiment. So did the third. It didn't matter that Sarah's paychecks were larger or that her skills were in constant demand. The system simply didn't know how to handle her non-traditional employment. Here's where the problem starts. When mortgage underwriters assess your income, they use a rigid formula. Multiply your hourly rate by your guaranteed hours. For Sarah, earning $45 per hour but with 0 hours formally guaranteed in her contract, her qualifying income on paper was zero. It didn't matter that she regularly worked 50 to 60 hours a week for the past 2 years, or that her annual income was a consistent $85,000. The formula simply couldn't account for her reality. This is a common pitfall for anyone working in high-demand fields with non-traditional schedules. Healthcare workers, freelancers, consultants, and countless others. The underwriter system doesn't recognize the guaranteed demand principle, the idea that the market's need for your skills is so strong that your employment is virtually assured, even without a traditional contract. That's when a spark of inspiration hit. If the problem was the underwriter's inability to see the true nature of Sarah's job security, what if I could show them undeniable proof? This led me to what I call the market saturation strategy. I grabbed the local Sunday newspaper and turned to the classified ads. There in black and white were 2.5 pages filled with ads from hospitals and clinics desperately seeking registered nurses. Not just a few open positions, but dozens upon dozens, each one a testament to the insatiable demand for Sarah's profession. I photocopied every page, creating a visual record of the market's hunger for healthcare workers. Next, I gathered Sarah's tax returns from the previous 2 years, which proved her income stability and work consistency in stark, irrefutable numbers. Together, these documents told a compelling story. This was not someone with an uncertain income, but a highly skilled professional whose employment and earnings were virtually guaranteed by the realities of the job market. I submitted this evidence to the underwriter, accompanied by a detailed cover letter explaining the guaranteed demand principle. I argued that for healthcare workers like Sarah, the concept of guaranteed hours was outdated because the market itself was her guarantee. 3 days later, the phone rang with the news Sarah had been waiting for. Her loan was approved. She got the keys to her dream home, a beautiful 3-bedroom in the suburbs. But the impact of this strategy went far beyond just one nurse. I've since used variations of this approach for freelancers, consultants, real estate agents, and other professionals with variable income. The secret is understanding what underwriters truly need. Compelling evidence that your income is both sustainable and reliable, even if it doesn't fit the traditional mold. If you're navigating the mortgage process with non-traditional income, remember this: the right documentation can make all the difference. Tomorrow, I'll share the 3 essential documents every gig worker that should gather before applying for a mortgage. One of them is probably already sitting in your email inbox, more powerful than you realize. Qualifying for a home mortgage is easier when you know what the lender is looking for. I created the Think Like a Mortgage Lender course for that exact reason. Click on the link below for details. Your new home purchase may be sooner than you think.